how do you think about that going from being an operator to now being investor? Is it a little more boring, or are you on the right side of this, or do you miss the
Yeah,
like day-to-day grind of being an entrepreneur?
it's more boring. I definitely miss having more of the teams and the interactions and the daily, a little bit of that daily grind, right? What are the problems? What are the successes? Having the wins, having that team. But I don't miss it enough where I'd go back to it, right? Like
Okay. It's hard. It's hard.
it is hard.
And we're back for another episode of the Startup Hustle. This is your host, Matt Watson. Today, I'm joined by Mr. Sean Beckner, who is a serial entrepreneur from here in Kansas City. He's done a few different things today. He likes to invest in a lot of things and help them grow. He's, kind of his own self-private equity manager at this point in time. So I think we have a fun conversation today about building companies versus growing companies versus investing in companies. Between the two of us, we've kind of done all these different things. We have the battle scars from all of them, and I'm sure Sean has got a lot of lesson learned on his part of it too. Before we get started, I do want to remind you guys today's episode is brought to you by Fullscale, which is my company. If you're looking to hire software developers, we have over 300 software developers in the Philippines, front end, back end, mobile, QA, whatever it is you're trying to do. We help some large publicly traded companies all the way to smaller startups and everything in between. Check us out, $5,000 to $6,000 a month. You can hire an excellent senior level software developer. Fullscale.io. So Sean, I don't know, where do we start, man? Where do we start? Where does this thing get started for you?
Well, gosh, going back to when I first met you, I think that was after you had sold a big business and we're starting another business, and we just started chatting about entrepreneurial stuff, and I think I had moved into the more the private equity, acquiring businesses at that point. But yeah, I have kind of two, I guess, phases of my career. I guess three now. I'm in the third. So first part was doing startups, founding businesses. Did that for 10 or 15 years, and then spent 10 years acquiring, doing M&A and buying, building businesses that way, and had a few exits. And then now I'm primarily an investor and a board member. So phase three now, but happy to talk about any of them.
You know, I think it's important to talk about those phases for a minute, because I think the ultimate goal, I mean, depending on the person, potentially is to get to your phase where being the founder and the entrepreneur running a business is hard. It's really hard, right? Being in
Mm-hmm.
the weeds, running the businesses is a lot of work. Now, some of us love it, like we enjoy that part of it. But ultimately, it'd be great to, say, own businesses that you don't have to run on a daily basis, right? Like you don't have that daily time commitment schedule that you have to be in the business on a daily basis, right? It'd be great to just be an owner or investor. It could also be really super boring, which I'm sure might be a little bit of your challenge. Like how do you think about that going from being an operator to now being investor? Is it a little more boring, or are you on the right side of this, or do you miss the
Yeah,
like day-to-day grind of being an entrepreneur?
it's more boring. I definitely miss having more of the teams and the interactions and the daily, a little bit of that daily grind, right? What are the problems? What are the successes? Having the wins, having that team. But I don't miss it enough where I'd go back to it, right? Like
Okay. It's hard. It's hard.
it is hard. It is fun having time, being able to choose what you want to work on. But yeah, I spend way too much time watching Netflix shows or just killing time because I've got it at this point, especially when the kids are at school.
Well, I think ultimately we all need some sense of purpose, right? And most entrepreneurs also have some form of like ADHD. Not everybody, but a lot of us do. And we are highly motivated by things that we're passionate about, we're interested in, that are unique, that are challenging. Like there's like the five things that highly motivate us. And if it's not one of those five things, I literally don't care about it. Like, don't even talk to me. I don't even care about this thing, right? Like a lot of us are highly driven, highly motivated to do unique things, challenging things. Like we like really thrive in those environments. So to sell a company, after I sold my first company, people asked me what it was like, and I was like, I felt like I got off the roller coaster. Like, what do I do now? Like, that was the fun part. And
Yep.
and kind of in your situation now, you're like, well, I get to invest, I get to do some things, but it's the balance of like, do you want to get back on the roller coaster, or is it challenging enough? Like, we all need a purpose, right? Like, do you feel like you struggle
Yep.
with having a purpose? Is that a fair question?
When I decided to quote unquote retire operationally, which it's about 3 years ago now. First couple weeks, I was like, yeah, I don't know if this is going to work. But about a month or two, and I was like, this is actually pretty good. And having done, I had done some investing, prior to my last couple of exits, but I really got into doing more private equity, larger check sizes, and I don't do a ton of deals, right? I think I'm in around
Yeah.
a dozen deals.
You do like
And
one or two a year or something, and they're bigger deals, right?
yep, yep, yep. 1 or 2 years, it's probably coming, more like three or four at this point.
Okay.
But out of those, call them 12 private equity investments, they're all kind of at the growth stage, right? So they're not Series A, typically not really even Series B. But there's probably three or four that I go heavy in. So if I have a lot of conviction, I'll get in maybe, in a Series A, kind of, dip my toe in the water, and then I'll come in heavier, in one of the later rounds. And I've found that if using your experiences to pick the right businesses where you see, they're hitting the KPIs, right? They're growing. They've got the team. They've got the product market fit. They're really crushing it. That if you can get in heavier with those, they outperform. They perform like your successful exits, right? Um, so if you're picky and choosy, you can still get those types of returns.
Yeah.
So to me, that's been really satisfying that I don't feel like I have to go, start another business to get a nine-figure exit. You can get those with private equity.
So I want to talk more about that. I want to talk more about building a business versus investing. And I completely agree that growing is easier. That's why I bought out my business partner at Full Scale. I'm like, I'd much rather grow this thing than start something new.
Yep.
But I think we need to dig in. I want to dig into more to your backstory a little more. You had a couple early companies. One was more of a true SaaS company, you'd say, and the other one is almost more of a publishing company, you would say. And tell it right. I don't know if that's a fair description, but tell us more about those two and kind of your early days and where you had early success.
Yeah. Yeah. So I've had a few startups. I was in the software game, out of college. Sold that business, got into internet lending, title space, sold those businesses, and those were, back then I thought those were, big exits, right? I had hit a home run or maybe a triple. Now I know it was a bunt single, right? But it got me on base. I got some cash. With Front Flip, which was mobile loyalty app. That was my first venture backed business. Everything before that I started, we bootstrapped it, right? We invested personally, used revenue to grow. And with Front Flip, we raised, it was 11, $12 million, I think.
It's a lot of money.
And it was a lot of money, and it changed the philosophy of building the way I had been doing it, right? So I'd always, built profitably. It takes longer, right? It's a slower grind when you're, not infusing big capital and you're just reinvesting profits, month over month. And with Front Flip, it was like, hey, we're not worried about being profitable yet, right? We're gonna, have a big monthly burn and go through a lot of cash and hire a lot of people and really try to scale this thing. And that was a little bit of a new experience for me. And we did some really good things in that. You naturally make some mistakes when you're trying to grow that fast. But it was a very unique experience. And it was kind of after selling Front Flip that's when I got into really M&A and acquired my first business in Viral Nova.
So Front Flip was cool because I first learned about it because it was in local restaurants here, right? Like the idea was to try and capture the contact information of consumers, right, as they go into restaurants, trying to give them loyalty stuff, trying to get them to come back, try to get their contact information, right? Like that was That was the
Yep.
original idea.
Yeah, it was. So we were really about a customer engagement and trying to do it in a fun way. So, yes, we had a lot of mom and pops. We also had customers like McDonald's and Wendy's and even some CPG like Bud Light. And the consumer would, scan a QR code with their mobile phone, and it would actually bring up a digital scratcher on their phone. So they would actually kind of scratch with their
A
finger,
free
and maybe they
coupon
win
or
a
something.
free appetizer. They wouldn't always win, but a lot of times you would get something, some sort of discount or a freebie, and the business would capture your data. They'd be able to do push notifications, email. So
Yeah.
it was definitely a good business. I'd say we did it at the right time. Um, it needed to morph into not being a QR code and just being geolocation, but yeah, it was a good little business that probably should have done better than I ultimately did.
What's interesting is you don't really see that even today. Like what you were doing back then, like still isn't. I don't notice today. Like I go to restaurants, like, they're not trying to capture my information very well and get me
Yeah.
on their loyalty programs. Like thinking about it now is it's like, hey, is there still an opportunity to do something like this?
I mean, probably, because where we were gonna take it, instead of like we worked with Applebee's or McDonald's, you walk in, you have to actually scan the QR code to win something. Well, you have geolocation, right? Like as soon as you walk into McDonald's, we should have been saying, hey, welcome back. Would you like, do you want to scratch our lottery ticket here to win something? Um, yeah, it should be getting used all the time. I still get surprised when I drive into Starbucks, which I do all the time, that their app doesn't load for me, right? And make it easier, right? I still have
Yeah,
to go find the Starbucks app
Mr.
and
Beckner, do you want another double macchiato? Blah 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 blah. Click yes.
yeah,
It would be nice, wouldn't
exactly.
it? Right?
Well, they don't even really even need the people at the counter to take your order, right? Like, I mean, they probably do because not everyone has it, but yeah, I come in, it's like here are the 10 things that have purchased in the last 6 months that I
I
can
order
pick
the
for free
same
that I
three
want now.
things. That's it.
Yeah, it's like no one is doing that. So
Yeah.
I'd say yes, there is an opportunity for businesses to better engage with consumers.
What my point is, like, what was an interesting idea, over 10 years ago now, right? Still an interesting idea today. Could still have legs today, maybe, if somebody figured out the right model and all that. So you guys ended up exiting that. Who did you end up selling that to?
We sold to a company out of Dallas called Shouts,
Okay.
and it's interesting because we had an offer from a very good venture capital firm to put in 7 million bucks into front flip, and we didn't have unanimous approval at the board to
Okay.
to do that. Hindsight, I should have pushed that through because front flip should have gotten way bigger than what it was when we sold. But I was maybe naive back then, entrepreneur. I said, if we don't have all five board members saying yes, right, then let's not do it. You have highly successful investors and board members. My opinion back then was, well, if we're going to say no, they're gonna back the business, right? And
The joys
you
of
know,
having a board.
long story short, when we didn't take that venture money, within I'd say 4 months, we were selling the business.
Okay.
So it went from a not a great outcome, where it could have been if we would have taken that venture money. Shopkick, you're probably familiar with that. It was working with Best Buy, and it was a little bit of that, notifications when you walk into the door. Um, they sold for I think nine figures like a year later. So
Wow.
that one should have been my first nine-figure exit.
Okay. Well, so now tell us about Viral Nova, because I think this is an interesting one where you could almost pick the date and time, like the date, the year that this was a big thing. Like on Facebook, there was all these like viral posts, and like Facebook was pushing all these pages that were,
Mm-hmm.
let's call them what they are, probably kind of very clickbaity, right? Like this viral
Yep.
stuff. Like there was definitely like a year or two, this was like really common on Facebook. And you were there at that exact moment in time and were one of the
Yep.
leaders of this thing and capitalized on it. I think it's a very interesting story. Tell us more about it.
Yeah, talk about right place, right time. So we had sold front flip, and I was like, all right, I need to do something, right? I'm not independently wealthy yet. I need to either start another business or I need to acquire something. And I said, hey, let's skip the whole startup thing. Let's go find a business we can acquire. And so I had a friend that was had acquired a few websites that was making money from ads, and they were actually development sites. So he had all different, probably 5 or 6 different sites, and I liked it because it was kind of message boards. He had traffic. I was like, well, that looks fun. So I started looking at hundreds of websites, and I came across Viral Nova, and it was owned by an individual owner. He had a couple of writers, and he had done a couple of articles about starting a business on Facebook was like, I think he said, like opening a McDonald's at the top of a volcano. Right. So he was like, he knew that like it was risky, and he was working 20 hours, but we connected, and he was looking to bring on a partner or sell the business. And so I was able to negotiate to acquire a majority of that business. We were making about 100,000 a month in profit when I acquired it, and this is basically the founder and like a couple of writers. So
Okay.
he was doing fantastic. Um, Bought the business for a low multiple. So it was a great deal, and brought in my team. So I brought in a few people to really start growing, and I knew some of the things I needed to execute primarily on the revenue side. But we doubled the profit the first month. We doubled it again the second month, and it's either the fourth or fifth month we had hit $1 million a month of EBITDA.
Oh wow.
So just a rocket ship, and that was of course incredibly fun. We were building some technology in the back end to help automate and really grow, putting out content on Facebook. But yes, it was clickbait. I'd like to say that our content was better. For me, clickbait was you're clicking on something that you think is going to talk about this, and it's really taking you to
Sure.
some
Yeah.
junk.
Yeah.
Like we were trying to put out really good, consumable, fun content. But yeah, it's like it's
But
a
that's
cat
like the whole
story,
internet
right?
now, right? Like even that's what CNN is. Like that's what everything is
Yeah,
now, right? It's like sort of viral,
yeah,
sensational, like driving clicks. Like that's all of social media is now this way. And
that's right.
even like myself, like when I'm trying to put stuff on LinkedIn or whatever, it's like it's all about the hook. It's all about getting interest. All about getting like the whole world is that way now. But it's
Yeah.
cool you guys were doing this in the beginning. Could you imagine how different this would have been if you would have had AI to help you do this? Then like that would have been a whole
Oh
different
man,
thing.
we would have had very few employees. We probably got up to it was in the 25, 30 employees. But I think at our height, we were, I think, like the 10th biggest website in the world.
Oh my
Like
god.
our traffic was absolutely insane
And most
because
all of
we
it from
had
Facebook, or was it coming from other places?
pretty much all of it from Facebook. We had some direct, we had email, newsletter, but it was pretty much all Facebook. So we had hundreds and hundreds of millions of fans from Facebook pages that we owned.
Yeah.
But then we built a network where people that had their own, Facebook page with, a couple million fans, we would actually give them links, we would track it, and we would pay them referral fees or a percentage of revenue. So we
So it
had
was
other
all
people
ad
sending out
based, right? This was all ad supported, like
all ad based.
Google ad,
Yeah.
like AdSense, or did you have other like ad partners?
No, we had a bunch. So we built a very sophisticated ad network, probably
Okay.
one of the best out there. So we had some of the best partners, and with that traffic, I negotiated all of that. We got the CPMS we were getting was amazing.
Okay.
We tried to balance it right of like one more ad, it's going to add this much more, but you don't want the consumer experience to be horrible. But we also we did some arbitrage where we would purchase traffic um, from Facebook, from Taboola, from Yahoo,
Right.
and there would be some arbitrage, right? You're spending a penny and you're hoping to make 2 pennies, but the business got big fast. But Facebook, they did set out to kill that model. So
Yeah.
they, at our height, we had it was over 100 million uniques a month. Like it was
Holy moly.
it was big. And I think Facebook was like, well, who is this Viral Nova? They're putting out this, dog and cat and you name it videos. We don't want them becoming Facebook, right? Because like if they didn't change their algorithms, I have no doubt that we would have gone from 1 million of EBITDA to 10 million in EBITDA per month, within a year. Like we were ramping, building on partners, and then Facebook started to slash. This happened to everybody.
Right.
The algorithm started to say, no, we're not going to expose your article to, 100 million people. We're going to expose it to 5 million people.
So the key here is, though, that you sold this business at just the right time, right?
That's right. Yep.
So tell us about that story.
Yeah. So, we got approached by a group that was, kind of building a portfolio of companies around the ad space, video content, digital content. So we sold the business to that group, and it was a partial cash and it was partial stock, but it was $100 million deal. In hindsight, I probably should have ran a process and sold the business to someone that was going to pay a higher percentage of cash, just because they were acquiring a lot of businesses that weren't profitable and they had a lot of debt. We sold it at the right time. If we would have held it, the business would have been 20% probably the size, a year or two later. So the timing was good, but I should have probably negotiated found a better acquirer.
What's interesting about so many businesses is timing. And what's interesting specifically to yours is, I don't know, at that moment in time, did you perceive the risk of Facebook? I mean, did you wake up every day worried like, man, at any moment Facebook could totally screw us and we're just dead? Like, did that go through your mind? You're like, oh no, this is always going to be this way. Like, I'm going to make $1 million a month in profit forever. Like, what was going through your mind during those times?
Yeah, no, we didn't know that it was going to go where it went. We did see that Facebook was tweaking things, right? We would say, because our traffic would dip, and we're like, well, what happened? Like, that was a great piece of content, and it's like, all right, well, it looks like we got exposure to less people. And then it seemed like they started kind of blocking different websites out there that were just putting out, junk. And so there was, in hindsight, yes, there was some writing on the wall. But I would not have guessed that Facebook would have gone to the extreme that they did to try to kill publishers in the manner that they did.
What's interesting is actually this is all kind of swung back around, because Facebook, like a lot of your stuff was on Facebook pages, right? And so Facebook pages kind of got pushed down and became more about individual people's content. Like pages become kind of dead. Like it was very difficult to get any views from a page. But then you had there's somebody had defined this for, I don't remember what it was, but basically then it went to like you're just seeing your friends' content, even though your friends' content may not be the most interesting, right? And TikTok changed the game when TikTok came out, because they went back to the same sort of model of, no, we're going to show people what's the most interesting to them, not who their friends are and what their friends posted. We're going to show what is the most interesting to them that will drive the most engagement. And that is the thing that I think more than any made TikTok such a big deal. And now everybody else has followed the same thing. So now if I go on Facebook, I see these goofy memes and images and videos, kind of back to the way it was back then when it was, but you guys were doing it more with text, right? There's a lot of it now with pictures and video as well. But it seems like the social media has swung back around to like, okay, what's going to drive the most engagement? What's going to drive people to use the platform more? And LinkedIn is very much this way too. But what they don't want is anybody to leave the platform, right? So that's why they're doing it with pictures and video, because then you're stuck on the platform. You're not clicking a link and then going to Viral Nova's website or something and then running away. Like I have this problem on LinkedIn. If I post anything on LinkedIn with a link to anywhere, the engagement and the number of impressions and views on that like automatically tanks. Like LinkedIn is not promoting something that will drive you away from their platform. So it's just interesting how the dynamics of this have changed, and everybody's kind of learned how it all should work and all these things. The platforms themselves have figured it all out too. So, but I credit TikTok for this.
Yeah, you hit it on the spot though, like because we were taking people off of Facebook; they were going to viralnova.com, which wasn't great for Facebook.
For Facebook.
But yes, if we had, back then started to say, hey, we're going to do more videos and we just want the engagement. And if it's on Facebook, that's fine. Um, then yes, that would have survived and obviously would be, quite large now because that is all you see.
So you had a about $100 million exit with this, and then the whole thing slowly kind of tailed off, and then didn't you eventually buy it back again?
I did. Yes. So yeah, they had some debt problems. They owed us some additional dollars, and long story short, yeah, I ended up buying it back for not even pennies. So yeah, so I got it back, and I ran it for probably another year, um, and it was still a good business. It wasn't at the scale that it was before, but still good. And then yeah, I sold it again. So
Is there any chance you're going to buy it a third time? You going to do this a third
zero
time?
chance,
Zero
zero
chance.
chance.
Um, all right. Well, I'd love to talk more about buying a business, investing in a business, growing a business versus starting one. I want to talk more about that. And at full scale, we do software development for other people. I had a business partner originally when we started it, and I bought out my business partner about a year ago. And much like you, I'm thinking, man, I could go start another SaaS company, but it is so much work. It is so hard to start a business and get to like the first million a year in revenue and get it off the ground, product market fit, go to market strategy, all these things. It's incredibly
Yep.
difficult. It was so much easier for me to be like, you know what, I'm going to buy out my business partner. We have an excellent service. We have a lot of customers. I know how to improve this thing. I know how to grow this thing. And I think there's tons of opportunities for entrepreneurs to do that. And to be truthfully, transparent, there's also like SBA programs for this. So like I actually bought out my business partner with an SBA loan. Like you can go borrow up to $5 million and buy out a business. So potentially, I don't want to say anybody can do this, but potentially like a lot of people can do this. Like you can go
Yeah.
buy an existing business and grow it and scale it. And then, you've done it a little, that's more of an operator, right? I'm going to do it as an operator. I'm going to go operate this thing, but then also doing it as an investor. So I'm curious, have you bought any businesses and operated them? Obviously you bought Viral Nova back and you did that, but have you bought other businesses?
Yeah, yeah. So after the Viral Nova exit, uh, pretty shortly after that, I probably about a year later, maybe just two, I acquired Naturello.
Yeah.
So that was an
Okay.
Amazon-based business, premium vitamin. So I bought a stake in that. The founder stayed on, was a shareholder still. So it was him and I. He had probably 5 employees, and it was doing 3.5, 4 million of EBITDA. So it was a great business, but really small staff. So kind of same thing. I brought in my team and built that team out. Acquired a VP of sales from Bayer, took that into retail. Yeah, so sold that business 2 years after acquired that. So we grew that to like 12 million of EBITDA in about 2 years. And about a year after Naturello, I acquired TrueSkin, which also was an Amazon business that is premium skincare. Same thing. It was the founder and like 5 employees. So bought that business, and same thing, took it into retail and sold that business about 2 years after acquiring that one. So yes, I did both CPG businesses, born on Amazon. So yeah, I had about a 5 year stretch there.
So
Sold both those businesses.
in both of those examples, why did those entrepreneurs, why did those companies sell you, a large share of the company, majority share or whatever? Like why did they do that with you?
Yeah. Yeah. Well, yeah. The thing that I found, and I found this in all of my acquisitions and a lot of deals that I didn't buy that I looked at, you know, entrepreneurs, founders, people have different skill sets, right? Some people are really good at launching a business. They're really terrible at growing it, right? Like someone can make some great technology and they're really good on the product side, but they don't have the sales side, right? Or vice versa. But most of the time with companies, they launch it, they're really good from going to, let's say, A to D or E,
Right.
right? And then they start getting in that phase of, okay, like I'm doing well, I'm making good money, right? I'm successful. But now I either need to hire a bunch of people, which I may be not good at, or I don't know who to hire. I don't know how to do the next hard thing, whether that's taking a business in the retail, opening up a new channel. Maybe they don't, they have a few products, but they don't really know what other products to launch. There's some sort of limitation where it could be real, right? They just don't have the skills for that. It could be they're risk averse, not wanting to take the risk, or just not sure what to do. So, you know, I found that if you can find, entrepreneurs that are somewhere in those, still early innings of the business, right? But they're at that inflection point. They've proven it. They've proven the model. It's successful. If you can kind of come in and say, hey, I'd like to acquire you and I can help it take this from D to, K, and then let them, stay on with a piece, right? Let them be a minority shareholder. It's a really good win-win combination. And I remember going against private equity groups and trying to acquire Naturello and TrueSkin. And there were people trying to buy 100% of those, 100% cash. And I was able to win those deals because, yes, there was a cash component, but there was also, hey, I still want you to be around. You can continue working or not work or just advise. With Naturello, the founder actually stayed on as CEO, which was great because it freed me up. With TrueSkin, the founder pretty much retired, right? Like he was on calls with us for 2 or 3 months and then kind of faded away and kind of wanted to do his own thing, which was fine. Both scenarios were totally fine with me. But they got that second bite, right? So that's really what helped me get those deals done.
Well, I think as an entrepreneur, potentially that is either the perfect situation or the worst situation. And the reason I say that is one of the companies I sold, I still had equity in the company that acquired it, and then they screwed it all up, right? So, I mean, it's always a little bit of a gamble when you're holding equity. Just like you said with Viral Nova, you're like, man, I wish I would have had more cash and less equity, right? So, so we've both been on both sides of this table where if it works really well, it's a home run, right? You're like, I took some money off the table. I have enough money that I feel safe and secure, and like whatever happens with this thing happens with this thing. But I can swing for the fences and hope for the second bite of the apple later. But ultimately they're betting in you. Like their gamble is you. Like, does Sean, the guy, to come in and take this to the next level and get me, that home run later? And how much do I believe in him, and how much do I want to take my chips off the table now? Like, it's a very difficult thing to figure out.
Yeah, I mean, with Naturello, after the Viral Nova thing, where we rolled a substantial piece of it, and it didn't go anywhere. With Naturello, when we sold that, and that was also it was a 9-figure deal. We did the opposite. We did 90% cash and 10% equity roll. The funny thing is that the business that acquired Naturello, they sold again about a year later, and that 10% that I rolled, it was a more than a double in 1 year. So it's like I should have rolled everything.
More equity, yeah. You never know. That's the thing. You never know.
So you just don't know. But yeah, it's what's your conviction, and what I think with Viral Nova is my first big sale. You're trying to get the deal done, and hindsight 2020. Yeah, I know a lot more now, but it's a tough decision for entrepreneurs to take.
But realistically, a win is a win, right? Like you'd rather have a win, guarantee it's going to be a win, versus continuing to take too much risk that it ends up not being a win, right? Like you don't have to get a lot of grand slams if you're going to be an entrepreneur over a long period of time, right? You really need a lot of singles, a lot of doubles. If you get a home run every once in a while, that's great. But just setting yourself up to win and going on to the next deal, there's nothing wrong with it, especially if you're in a lot of deals like you are, especially you're doing a lot of different deals. You don't need every one of them to be a grand slam. You just want everyone to have a good positive outcome, and that's the way VCs operate and private equity operates, right? Like they know not every deal they do is going to be some kind of big grand slam. They just want a healthy rate of return from every one of them. And I think you can't get overly greedy in these things either. You just got to have like a certain rate of return you're trying to get to and be like, I'm happy with it. I can sleep with this. I'm not going to, be up every night mad because I didn't get more money out of this deal.
Yeah. The biggest thing for me was that the businesses were running profitably, right? So outside of the venture-backed business that was, getting there, everything else I've done, we've been running it to be profitable early on and scale that, from there. That gives you ultimately the optionality, right? So, you could sell the business and say, hey, I'm getting a really good multiple here. Let's exit. Let's take the chips off. Maybe it could be bigger, but if you're profitable, you've got that optionality. So that to me has always been the key. You can hold it for another year, 2 years, 3 years. You're not ever needing to sell, which is when you're going to get the worst deal.
That's what I told a friend of mine the other day. He was like real close to being profitable, and I'm like, hey, you get to the point where you can sort of bootstrap it from here. You can sleep at night. You have no stress. Then you control everything. You can decide if you want to go raise money or just keep doing what you're doing. You're in 100%, control. And I had a little bit of this conversation with my team yesterday, actually, about Full Scale. He's like, hey, when you bought, the old business partner out, it's like you wanted to grow this thing to 1,000 employees and want to do all this, that, and we're feeling a little down that we're not making that progress. We're not growing that fast. What should we do today? Like, how should we feel about that? How do we do that? And I told them, like, guys, my goal is to have a profitable, healthy business. Like, in no way am I going to bet the farm to try and grow at this like stupid pace to hit this number. Like, if we can be very profitable, very well run business and grow 20 to 30% a year, like, I'll be extremely happy. Like,
Huge.
And part of that is just setting those expectations with the team, right? Like, you can't have a team member who's frustrated every day that the company's not hitting some overinflated goals. It's like, no, I'll be very happy if this is what we achieve, and it's always important to have everybody in agreement on that. So,
agreed.
What is next for you? Like, you continue to, you come in as I think a fairly large investor. I don't know if you lead a lot of these rounds, but I mean, you're getting into a lot of bigger deals, a lot of bigger private equity deals. Like, are you the next like KKR, like going to run your own fund? Like, do you see creating your own fund? Like, what's the plan?
Yeah, no and probably no. I enjoy more of a family office, right? I enjoy looking at the deals, selecting a handful to back. I think the thing for me is that the check sizes keep getting bigger, right? Taking more meaningful, stakes in the businesses. I enjoy that. And, to me, it's like, I've thought about the whole fund approach because, I've found great deals and the vast majority of things that I've done very, very well. And I've brought in some colleagues on things with me and they've done very well too. But raising a fund, having investors,
it'd be a real job,
big headache. It's like it's like you're getting back into it in a big way where I can be picky and choosy. And, for me, it's like, if you just keep picking winners, 5 or 10 years from now, it is a big, private equity fund without the headache.
That's your
But
own family
really,
office.
it's more about enjoying. Yeah, it's really more enjoying. I enjoy working on deals. I enjoy helping things grow. That's not work for me, right? So,
well, back to our earlier part of our conversation about how we all need something to do. We all need a purpose. We all need a challenge, right? I'm sure you already invest in other private equity and VCs where you just write them a check for, millions of dollars, whatever it is, right? You just invest in the fund and they just do it and you don't have to do anything, right? You're totally hands off.
yeah.
But this gives you a more meaningful way to have something to do and be involved and actually be at least an advisor in these companies, be more hands-on, which gives you a greater sense of purpose, right, and something to do than just writing the check and letting some other private equity deal with all of it. So you found your way of like, I can still have my hands in this. I can do as much work as I want to do. I can make meaningful impact. Like you found, I think, a great balance in this.
Yeah, the thing I like about it, so I kind of mentioned it earlier. I wish I had done less in the funds because it really is invest it and forget it, right? You have no say. The updates are pretty minimal, and they can invest in anything, right? So for me, the 12 or so deals I'm in, there's some of them that it's only a couple $100,000 check size, right? Like interesting business, maybe it could be good. I'll take a flyer on it. Where others, maybe it's a $25 million check size. Like I have big conviction.
That's a big bet.
I've tracked it over time. And, that's kind of what the Charlie Munger and Warren Buffett, right? They have those handful of deals that they did really, really well on. So This is obviously a way different scale than that, but it's the same kind of philosophy. When you do it yourself, if you have access to deals, right, then you are able to pick and choose yes or no, and also pick the check size, which to me is better than just putting bets into the private equity funds. And so far, I'm doing much better than those guys. We'll see long term. It gets harder, right, as you want to write bigger checks. And
you also have more money to put to work, which is kind of a problem too, right? Like if you make if you make $1 million a month in profit, at some point in time, it's like a problem of like, what do I invest this in? Like every month I have to find something to invest $1 million in.
Yeah,
right.
I know. Yeah,
it becomes a problem. How do I put the money to work?
Yeah, it's a good problem, but yeah, it is real, right? You do need to put it to work, and that's where a lot of people, when I talk to entrepreneurs that are thinking about selling their business, it's what's your growth rate, right? If you're still growing really fast, I tell them, hey, if you sell this business, you have to go invest those dollars somewhere, right? And yeah, if your business is becoming more mature or you're just burnt out or whatever, yeah, there's definitely reasons to sell. Capital gains is way better than ordinary income, right? But you still have to invest it. And if you have a high growing business, that's growing 20 or 30%, you're not going to be able to replicate that with investing the funds, right? So
no. I have this exact conversation with every entrepreneur I talk to, and I use Full Scale as an example. Over the last few years, we've grown 20 to 30% a year, and we have about a 20% EBITDA margin. That means it's like a 40 to 50% like return a year. I will sell this company and invest in something else as soon as you tell me what the other thing is that gives a higher rate of return. You tell me what it is, and I will invest. But until then, why would I do it? Right?
Yeah. No, you got one of those businesses. It's funny. We've got creative planning locally here. I'm sure you're familiar with those guys. They acquire a ton of businesses, right? Yours can be similar in that you could acquire other shops and there's probably synergies and things that could work with that, but that would be probably a better use than selling. Now, when you're growing that fast, it's now granted that is where you're going to get the highest multiples, right? And there are numbers where it's like, all right, someone's going to give you 10, 12, 15 years worth of your EBITDA, and you're going to pay, 30% tax depending on your state versus 50%, you're getting 20, 25 years worth of income. Like, okay, like I'm willing to.
Then you got to go find another business to buy and do it all over again.
Yeah. The key is that you don't go do a startup again. You go,
you go buy something you can grow and do it again.
Business.
Yeah.
That's right.
100%. Well, I really appreciate the conversation today. You and I have known each other for a long time, but great that you finally were on the podcast. I don't know why we didn't do this a long time ago. Great entrepreneur from here in Kansas City, doing a lot of stuff people probably don't know about behind the scenes, doing some cool stuff. So, Sean, thank you so much for being on the show today.
Yeah. Thanks for having me. Big fan.
And once again, if you need to hire software developers, check us out at Full Scale, fullscale.io. Sean, we'll see you around town soon.
See you soon.
Thank you.